And hi, everyone. Welcome to another edition of Your Money Radio. Danny Stewart, Don Vandenborg, and Hunter Mazingo. Mazingo, right?
Right.
I'm
Spot on.
pronouncing that right?
You are. A lot of people like to throw an N in there before the Z, Monzingo, but Mazingo's right. You're spot on.
Yeah, well,
Oh, I've been throwing an N in there. I didn't know that. I've been throwing an N in there.
I'm used to it at this point. I just, as long as,
Is
and the old saying is
nobody
close enough for
less
government
shocked
work.
on this call? Or didn't even know you were doing that.
But you have an N in the spelling, right? Yeah.
I do, but it's towards the end.
Oh, you're saying the
Danny,
N
I'm not
before
gonna
the Z.
lie to you. It actually says it right here.
Yeah, no, I see that. I just noticed that after I asked. But you're saying people say Monzingo, the N
They
before the Z.
do. But yeah, most of my friends growing up, I've been called Z.
People like you, Danny?
Yeah, people like me.
That's all right, man. I didn't do that. I didn't know you were doing that, Danny. I just wanted to make sure I was pronouncing Hunter's name properly. That's all.
I just call him Hunter.
That works
See,
too.
that works too. Yeah.
Also effective, yeah.
The
Yeah,
big
yeah,
H. The big H.
That gets his attention as well. So look, Hunter's our analyst. We'll get into some of Hunter's work here later in the show, but let's do this. It's an interesting time period in the markets. It's options expiration time, which comes only but 12 times a year. But this move right here off the NASDAQ, and I want to get into some earnings trades, stock nerds and market lovers, and I want to talk some moves that have been happening in the shop portfolio-wise that we've been doing, and share some insights with you. But this is a really bullish move. Now, it's formed this consolidation here where you're like, hey, there's no way the market can go higher because of all the reasons that you might state why the market can't, in fact, go higher. And then here we are. And what you've got forming is another consolidation, and that you're holding the 8, which is this green dotted line. The 5 is a purple line there. The 21, the mean, is exponential right down there, the pink one. You're holding the 5 and you're holding the 8, and I view that bullishly. And you can see a little topping tail here as the markets have pulled back. And I view all that as just noise of options expiration. And so we'll show you the S&Ps here first. But there's things that when you spot these patterns in the indices, you can do. And so like here is the S&Ps really look similar, but there's things that you can do stock wise. And so like if you look at Chipotle, now we've owned Chipotle in the shop for a while, going back a long time, but on here's 10.6. And so there's a commonality when you're getting ready to do earnings trades. And earnings for me, I don't know about you fellas, but earnings for me starts really the first week that big tech reports. Like I know banks reported. I don't view that as setting the tone for earnings. Call me new school, but Netflix, and when Amazon reports, when Facebook, when Google reports, those all kind of feel like the big ones, right? Maybe you might throw in there the chips, and they have a big say in what's going on. I think that's in earnest. Like the next 2.5 weeks coming up are your big earnings periods. But what happens here is you have to have it's like shooting pool. You have to have your next shot in line before you're taking it. So while you're shooting your current shot, you're thinking 3 shots ahead of how you're going to operate on the table. And so like if you take a stock like Chipotle, you want to look for moments in time that look like this. And 10.6 stands out to me. I actually have to look at my notes. And then like with Zoom now, 10.15. And so what is, here's 10, is that, Danny, did we buy Zoom on 10? I think we bought Zoom on 10.14, right?
Sounds good.
Okay, 10.14 or 10. It's one of these two dates in here when it just kept not releasing off the 8 there. And
it was about 3 days ago.
Yeah.
I entered it on 9/22, the first buy.
Oh, let's look at that. Yeah, 9/22. Thank you for that, Don. So, and this, I'm glad Don just said that. Let me get the date here. Let me mark them all. So here is 9/22, and then here is I believe it was that day right there that I entered it. And there's a million ways to skin this cat. I would have loved to had Don's entry here, but one of my favorite phrases in trading is you can't touch all the water. And so just
I've pyramided this one too. I added on 10.9 and added on 10.15.
let me get those dates.
So I've actually bought 3 times in this.
Oh, okay, so
1019 is when we got it. 1019. I just looked.
Today's the 16th, fellas.
I'm gonna have the date wrong. Hang on.
Let's just pause for a second.
Dan's got tomorrow's newspaper again.
Man,
I'm sorry. I was looking at the settlement date. It was 10:15. You're right. It was yesterday.
10:15. Okay. It's my favorite.
I was
Those
looking at the
moments in time
settlement
are
date, not the trade date.
No, it's okay. It's understandable. It happens. Mazingo. That will forever now known be as Dan just did a Mazingo. So one brief moment in time. So you can get into these things, and I often tell, like, so many stockers, market lovers will contact me and say I missed the move, and I always ask you to go down. If you look at your lower time frame charts, you look at your consolidations, and I haven't moved off of the daily chart. Moments in time here have been giving you the clue that this is something that you want to be in. Well, Tim, you didn't get it when Don did. No, I didn't. I have other things in the portfolio, a little different focus. It wasn't a decision by me like, screw Zoom. Not at all. Just can't touch all the water when you go for a swim. You narrow kind of lane when you do that. And so, but I did pick it up on 9.15 here, down around 5 as we now trade 562. Look, you don't have, and my point being here, there's a lot of things you can do with this information. You don't have to be perfect. You just have to have a couple of things going in your favor. One, well, obviously the stock price, right? But you don't know that that's going to happen. So what do you do when you're looking at taking setups into an earnings period for a stock, or just trying to get back into the overall market? And really what I'm talking about here is the psychology to help you get over you, because we're often, as human beings, the limiting factor in our own trading and investing, and we get in our way. And so when we talk stock nerds, hey, what's your setup, right? And like, what are the things that you're looking for? And Don and I have a commonality where we're looking for the 7 common traits, looking for the market to be aligned with the stock, market direction to be aligned with the stock. That's a really key thing right there, since 70 to 80% of all stocks follow the general market's trend. And then we're looking for consolidations, consolidated periods on maybe different time frame charts that allow you to get into something that has the potential to go higher. And then something that I don't often talk about, and Don does a lot of work with this that I quite frankly don't do, but I do look at beta. And so I have a thought that, especially with options, that if I want to get into a stock, I want the beta to be greater than that of the indices, or like, let's just use a beta of 1, okay? So if the S&P is 1, I want a stock that I'm getting into to have a higher beta oftentimes during normal times. Well, why is that? Because I want the stock to move. If the market goes up 1%, I want that stock to go up X times the beta. And if I'm not going to do that, well, why not just buy the indices then? Danny, does that make sense the way I just phrased it?
Yeah, I followed it.
Did you really?
I did.
Okay, because that wasn't me checking on you.
Nobody more shocked than me. Normally, I got to clean it up.
Okay, well
that was pretty concise.
Then we'll just keep pressing on. And then 3, your biggest weapon is the fight against your own greed. And that's we'll just call it, you can tell me what you think this stands for, but we'll just call it POS. Look at Don. POS, positions 1987. I'll tell you what, people tried to call it a POS. How do you draw another wheel? Maybe like that. I'm not really sure, but there was a car, 87 Pontiac Grand Am. That doesn't look like anything like a car. Gosh, damn.
Unless you're Fred Flintstone.
Yeah.
Like, seriously, I really can't draw. Anyway, so
everybody's nodding
size.
right now. That last statement.
Position.
Your animals are
sizing.
phenomenal.
We need to take his marker away.
Oh yeah, you know what? I can draw a bunny, I think.
Oh, I'm sure. Yeah, that's a cat.
Yeah, I was thinking cat too.
Oh, that's a cat? Oh, bunnies are this, right? Like you do like a little foot, and then like a noggin, and then like
that's Mickey Mouse.
Well, No, let me drill the other beer. Does that? God.
It just looks like a labyrinth. I have no idea what that is.
That's supposed to be a bunny. No?
You've got
Okay.
a clear button, don't you?
Yep. And so
There we go.
yeah. And so we'll do position sizing. And look, stock nerds, the position size that Don took, the position size. Don, how did you pyramid in? What was your sizing initially and then as you went on?
1.5, 2, 1.5.
So Don went into the trade just like I did, expecting it not to work. Okay. That's a big deal. Expecting it not to work. And so he position sizes based on risk and going, okay, well, if I want to add to it, what do I want to start out with? 1.5%. I started, Danny, what did we start out with? 2.5%, 3%? I think it was 3. Yep, 3%. And so, and I can build up to a 5% position if I want. My normal position size in equities is 5%. And they're like, well, that's not even a lot. I want to be concentrated. You love it when it's doing this, and you hate it when it's doing this. And this looks all smooth. This looks like a really smooth move. Let me tell you something. Look at the average true range over the last 14 days. That is not a smooth journey. It looks like it on a daily chart, but intraday, this thing's moving $21, $22 a share. And believe me, if you've been following Zoom and you've been in it, you've been seeing the closes below 5, taking it down to 488. And so it looks easy to hold in hindsight, but it's not that easy of a trade. And a lot of those things do it to you. But if you use position sizing where no one position can ruin you, you can absolutely, there's a number of things you can do. Don, what's your gain on your Zoom position? Do you even know? The guys don't know what I'm going to ask them or talk about really before the show. So
Yes, 7, 13, and 18. So the first one is 18, second one is 13, third one is 7.5.
Yeah, and if you can find these periods in time, there's a tremendous amount you can do. Like take Restoration Hardware. So Danny, we entered Restoration Hardware.
I got a quick question. Those are all equal weighted positions, or a third, a third, a third?
Well, no, it was 1.5, 2, 1.5.
Okay.
So the average is 13 and
That's
change.
what I was going to say. The blended rate is about 13. Okay. Sorry, Tim, go ahead.
No, that's all right. So let me get you fellas back on the screen because you disappear when I start drawing, which probably isn't a bad thing. I can't see y'all laughing at me.
And as far as your comment on position sizing, Tim, ask anybody that was heavy in Fastly how they're feeling
let's
right
do that
now.
real quick. I wasn't even going to do that, but let's do that.
Ouch.
Oh yeah, hold on. There we go. That's a
And I was in it anywhere from 3 to 5%, 25% drop on a 5% position. Doesn't feel good, but it's 1.25% of the overall portfolio, and that's very manageable. That's a paper cut, relatively speaking.
And not only that, you timed the entry right, so you already had a 25, 30% gain.
Yeah.
So you still broke even.
Don,
Right.
where'd you buy Fastly? Give me that entry.
Let's see. Fastly was bought on 925.
All right, so there we go. Let me find 925, and we're gonna zoom in to that moment in time. And look at what the chart did. So Fastly was what? Consolidating. And it was right around the 21. Great entry. And what's so special about the 21? It's your lowest risk entry, stock nerds. For me, you might say, well, lower would be even better. Yeah, the mean is where most stocks come back to, the leaders. Like, so there's a certain set of characteristics Don and I work with, and Hunter as well now, and a whole bunch of traders out there too. But in this industry, how we operate, it's pretty unique. But there's these commonalities that all these stocks possess allows us to know when they're acting, quote unquote, right, or when they're not acting right. And so, and it's no big secret, it's based on sales, earnings acceleration, institutional support, rising revenues, and they're measured. It's not just, oh, it's going up. No, they're 25% quarter after quarter, year after year. And there's a lot of things you want to see in there. And then you combine that with the market's direction, and it gives you a recipe for the stocks that have the propensity to want to outperform when the market environment is absolutely right. And so Fastly was one of those stocks till it wasn't. But why wasn't Don suffering some, I don't know about catastrophic, but huge loss that I know a bunch of traders were taking this week? Or they didn't take it, Don. It's not a loss because they didn't take it.
Right.
Their
Tell
wife doesn't know about it
that
yet.
to the people that are calling and checking after they check their balance.
Yeah, and so because Don position sized right, they don't all work out. Like that was a shock. Like that pre-announcement was a huge shock. Like, and if you traded options in that, you long calls, you were screwed. Just absolutely hosed. I mean, wiped out.
And by the way, it was also still the right idea to sell it. So when Don heard it was right after hours, he actually sold it after hours so that he didn't have to worry about another gap down the following day. And now it's down another, over 4% today. So
right.
you got it. When it's time to sell, it's time to sell. When it's time to buy, it's time to buy. No excuses. No.
I try to talk people out of options on a pretty consistent basis when it comes to wanting to trade options. Even though I love trading options, I talked to. By the way, there is a great stock nerd, and she sent me. I'm going to show you something here in a moment. She was in the back of my mind all week because she sent me. You know how I did that Piton trade, Danny, last week, where I sold calls against my calls. And I ended up taking a loss on the calls that I had sold. Do you remember that?
Uh-huh.
You don't sound convincing enough.
Yeah, I remember exactly.
That was better. I don't know if you're faking it or not, but that was a heck of a lot better. So I sold calls against my calls and against my long calls, and I was like, so I did that. And it was a great trade, but I got out of it way too early. So she was in the back of my mind. Because when I was thinking about Chipotle, and Chipotle, what I do, I got to look at my notes, 10-6, going back to 10-6 with Chipotle, these quiet moments in time when position sized right, you don't have to have the leverage of options. You don't have to. I enjoy it, but I still position size appropriately. But if you took that Fastly trade, like you got to think that the premium that and it's premium. It's like an insurance policy. When your house doesn't burn down, are you mad that you spent the money on a fire insurance premium? Some of you might be, I don't know, but I am not. And so, but a lot of, I'm telling you, Fastly, you know what stock did that to people too, Danny? GameStop. Boy, look at GameStop has wiped out a bunch of people that were short this thing. I mean, this thing has had a tremendous move since 10-6. Just ever since that Microsoft deal came about, GameStop's been acting really well. It's on my radar. I don't own it, but it's on my radar. Anyway, back to Peloton. Let's see. When do we get Peloton, Danny? 929. Don, you've been in Peloton a lot longer than I have, right?
No, I don't have Peloton.
Oh,
it's been in the 2121 list for forever, but I've never took the plunge on it. Probably because I don't like bike riding, which is weird, but that's not a reason not to buy it.
That's an awesome.
But I can't say 100% that that's not why I'm in it. So
is that a sin stock to you? Like some people don't buy the exercise stocks. I don't buy. No, you go running on the beach every morning.
I do, yeah, but that's not biking.
So Peloton's cheating. You got to use your own body, right? Peloton's cheating.
What?
Never mind.
You are having
Hunter, did you make any sense out of that? We're just checking.
A little bit, maybe. Just
really?
Yeah, just made that it's easier.
You're having
easier.
a hell of a show, Danny. Like if every show was like this, it'd be great.
What I meant was riding that stationary bike Peloton is a hell of a lot easier than running on the beach.
You still have to sit on a seat. That's, I guess, what I don't like about it.
Fair enough. Fair enough. So 929.
So now I'll get a bunch of texts and emails about, hey, I've got the best bike seat ever for you, Don. You'll like biking if you get this seat.
So it's but look, stockers, there's a number of things. If you can nail your entry off the 5, there's a bunch of things you can do. You can just buy the shares, right? This is a great trade from, we've had Peloton now since that date right there. And then like Restoration Hardware, one of my favorite stocks right now. CMG, Restoration Hardware, and Tesla are some of my favorite setups right now. We'll get into that in a moment. RH, we bought, I never said this. We bought RH on 716, pardon me. We're 716, geez, all the way back here. Look at that dip, Don, right off the 21, and I bought it here, had that good earnings report, and now this is a huge, beautiful setup again. But I did options in this too on 10-12, and I'll show you that in a minute how they're working out. 10-12 off the 21, and 10-15 I added some. Say this, yeah, right here off the 8. So we'll take a look at that here in a moment. But look, when you add options, and I'm trying to talk people out of them, you add a dimension to your trading that's exponential that could be extremely painful. And if you're not position sized right, why are you smiling, Don?
Because I'm looking back through my trades and I got stopped out of Peloton on 12/23/2019 at $29.
That sucks. And Don's, oh, listen, for those of you that don't know, Don is having, is this your best year in the market ever, Don?
Absolutely.
Yeah, Don is knocking the cover off the baseball. Like, it is amazing the year that, like, all this risk parameter stuff, I'm telling you, it compounds itself when you're able to just keep cycling in, and keeping the velocity of money going forward. That's why we talk about it with you all the time.
Especially compared to what the market's doing. I mean, how the market's.
Oh, well, yeah. I mean,
first quarter was so volatile. Yeah.
Yeah, no, like everything that we've done, like, look, I know I'm clearly the best looking one on the show.
Clearly.
And yeah, I mean, there's a lot going on over
Tim,
here.
now that we added Hunter, you're number 4, buddy. You used to be in the top 3.
I think when people would rate us, Danny, they would allow you as affable Danny Stewart, and then they would be like, "Oh, he's cute in an affable way."
Oh,
He has a nice personality.
you're writing my intro for the newsletter email right now.
Fantastic. So look, there's a lot you can do. Like, I'm going to show you though that theta decay is your enemy. And I'm trying to talk people out of options. So I've got some earnings trades on. I put on specifically. These are things I would do if I didn't have a show to do with the guys. But I thought, you know what? Let me throw on a couple of these earnings trades because I've got some out of the money calls on a few of these, and you can see how on a day like today, options expiration, what's happening here. So we'll start with. Oh, and we bought Beyond Meat. Let me do that last one too, because that's a pilot for, we bought Beyond. And so Beyond Meat is, I don't know, we'll see where it closes. I didn't buy this gap up. We bought it yesterday in this zone right here. It's holding a little bit. This is a area of consolidation. This is an earnings trade for me. So here's earnings, even though it's got a question mark. What is that date? 10/28. Don, what do you have as earnings for Beyond? Because Thinkorswim sometimes doesn't jive with all the other sources.
10/28, not confirmed though.
Yeah. Okay. So I bought a small position in Beyond for a run into earnings, and then I specifically bought. Let me just type in Beyond. Let me see. I specifically bought just one call here out of the money, $200. And look, it's not getting completely destroyed because because these options are holding their value. And so if you want to know how to do this, and a lot of the folks that follow us do trade on Thinkorswim and they have access to this information. So Beyond, you can pick up where the earnings are. Oh, look at this, Don. This is higher implied volatility. I wonder if earnings are this week. So this was not this way yesterday when I did this. See how the volatility is 57%, 61%, 84%, and then it drops down. I bet you this week of November 6th, I might have the wrong series here.
Well, no, that's right after earnings. Remember, it said the 28th. It's going to be through earnings. Oh, you got October 30th. You're right.
Yeah, so that's October 30. So I'm thinking that options are down here. Amazon's got the same issue because Amazon unconfirmed date. And if you look at Amazon, and I took my Amazon, I've got Amazon stock in another account, but I took my Amazon calls off earlier. Like, look at this. Look at this. 40%, 59%, 57%. The week of November that ends November 6th. I'm betting that's 59%. I'm betting you it's this week. I'm sorry. 59%. So anyway, the
Yeah, it's
calls
not
with
confirmed. They have not posted anything to their website about
okay.
earnings.
Well, that's
I
fine.
bet you the options traders are giving a little one extra week for when they're not confirmed, because you don't know. It's going to be around that date, but they may push it out a couple more days.
Maybe.
So
Yeah.
once they announce it, if you bought it 2 days short, you may have, screwed
Yeah.
yourself.
Maybe, but
Well,
once they're
Amazon pushed
announced,
theirs the last 2 earnings. I think they've delayed it by about a week, and Beyond may have
okay.
done the same thing. I'm not sure. So it may just be that since it's not confirmed, they're kind of anticipating what's happened the last couple of times as well.
Sure.
Yeah,
So
their prior two were May 5th, August 4th. So you would think the first week in November based on that.
yeah, so Chipotle and RH. So we'll do RH here. RH does not have earnings coming up. I don't think RH has earnings till long. Yeah, down here in the end of right at the end of November. So Chipotle is I've got Chipotle and Tesla. I'll show you. So Chipotle is 10.21, and Tesla is 10.21. Both after 10.21. So I've got these for earnings. So I'll show you the Tesla trade first. This one is, when I say it's not working out, so you can see here that you're down, you're only down. This is why options are so difficult, and why so many people, like when they say options expire worthless. So Tesla's only down 0.5% here. But because I've got out of the money calls, this was a lotto ticket. Out of the money calls here, you can see the theta decay. Look at that theta decay. That's $3,000 every day. So you've got to move up that much to overcome the theta decay. Now, I could have sold calls against this week. As a matter of fact, I had calls that I sold last week. I sold this week against it, but a stock nerd who's, I didn't even get into the information she sent me. She goes, I do the same thing you do, but you've got to see this work on expected move. And if you're not familiar with expected move, it's these numbers right here. And you can tell how it's accelerating or blowing through it. And I'm like, well, that's fascinating. I need to read it. I still haven't read it. But she was in the back of my mind. So when the market took a little bit of a hit yesterday, I took off all those calls. I could have picked up some more theta decay and lessened this blow. But that's why options are so tough. Like, you're not down, but 0.5%. And this is the theta decay absolutely crushes you. So then you come back to the chart, and like, is the Tesla chart still valid? Yeah, there's nothing wrong with this. And so my plan is, and I'll update this next week, I'm not holding through earnings, I'm holding to earnings. And so that implied volatility, like if you go back here and you look at the implied volatility, we'll put a marker on this, Danny. It's at 96%. So my thought is that this implied volatility will absolutely go up to about 150% before they report earnings next. What is the 21st? Is it next Thursday?
Wednesday.
Wednesday. So yeah, that implied volatility will increase, and you'll see the premium go up. Like, you'll see the calls will hold their values, the puts will hold their values. And what I don't do is I don't hold through earnings. I want to sell into that, whether this is a gain or a loss. This is a time trade. I'm going to sell, but I'm going to keep my stock. Unless Tesla breaks down, the stock is fine. It's the options that require a tremendous amount of timing with it. And that's why options are so difficult, and why people look at these charts and go, oh yeah, if I would have just bought some calls here. Well, what calls? I purposely, when I do earnings, I buy Delta 30 or Delta 40 calls, Delta 20, Delta 30, or Delta 40 calls. I buy out of the money calls typically. And I did the same thing with Chipotle. So Chipotle is down $3 today. And it's a wide range today, Danny, 13.55. And this is all options expiration stuff in my humble opinion. But if you look at Chipotle, the delta on these calls, I started at Delta 20, I believe, and now they're Delta 65s. So when options aren't easy is what I'm really trying to get at here. I get a lot of questions about options from stock nerds, and the stock nerds that know, they know. But the fallacy that you can just step in and start buying calls or buying puts and it's a smooth ride, is that timing is the most difficult part of it. And so when you're doing an earning, but if you're doing an earnings trade, you can just do what Don's doing. Don, they're not specifically earnings trades, but you can just step in at a moment of consolidation. Don, give me a stock you've entered recently from a low risk entry point.
Oh, let's take a look. FCX.
Okay. What date?
10/2.
Oh, they're going to report next week too? 10/22?
Yes. Yes.
Okay, that's great. This is great. So let's see, 10/2. Oh, gosh darn it. Don, I didn't realize I'm on a weekly chart. Why didn't you tell me?
Tim, you're on a weekly chart.
Thanks, dude. 10/2. So look
This
at
was a
low risk
podcast
entry point.
buy, actually. I think I bought it during or right before the podcast on 10/2.
Oh, I remember this week. This is
When
when
it
I picked
moved-
up Builder. I think this is the same week maybe not. They all blend together. But look at this. This is right around the mean, and you can see this a lot better. Let's put this on an ATR chart. I mean, right in here. Look at this. That beautiful consolidation. Right there's 10/2. Man, that's a great buy. Look at that. And so what's your determinant if you keep it going into earnings, Don?
If it's acting well, I will keep it and I'll size it so that, it's already sized small enough that I wouldn't have to sell anything. It's a 3% position. But what I do is calculate the 2 times expected move as a worst case scenario to the downside.
And and so where does that number come from? It comes from here. So we should probably just put in FCX. So FCX next week. And this number, it changes right up until the report or close enough. So
Yeah,
FCX,
you want to look at the day of earnings and see what the expected move is.
So right there, the move in FCX is $1.21. And
So multiply that by 2, and then that's a worst case scenario. And what I want to do is, if the worst case scenario happens, which happened on Xilinx, something I was holding after earnings, I sized it down luckily before earnings. I don't want to lose more than 1% of the portfolio if the worst case happens.
Right. And those are Don's earnings rules. For me, I have like a step stool approach where, let me get a chart back up here and pull you fellas back up here too. So it's a step stool for me where 10% gain, that, okay, probably going to hold it. And then if I don't have a 10% gain, what I need to know what the expected move is. Where am I at on it? What is the gain that I have? And then what does the chart look like? And what's the market doing? And then if it's a 2% move and I've got a 6% gain and the chart looks fine and the market's fine, there's a really good chance I'm going to hold that stock. But if I don't have a gain or, God forbid, a loss in the stock, and it doesn't matter what the expected move is, I'm out, because it's just so unknown. Like, there's no whisper numbers anymore. I can't tell coming or going, is that number baked in? Like you always hear it, it's don't expect much after the report. The number's already baked in. Well, how would I know that? I don't have any more information than you do. So it's just a rule-based approach that keeps me in stocks. I have a tremendous gain in Restoration Hardware, and what kept me in that stock were the rules. From 716, where is it at? 716, right through here. Oh, for the love of me. Here we go. See if I can get the marker engaged. Like 716 to here, that was, and you can see it took a little bit of a dip, but RH met my rules to hold, and I was able to take advantage of that earnings report. They don't all work out that way. What stock did you wrong, Don? Xilinx?
Yeah.
XLNX?
XLNX, and it was on.
Your camera's paused too. I don't know if you know that. That might be on purpose though.
There, that was somebody trying to call.
Oh.
On 4/26, the week of 4/26, 2019, I
We're going back a ways. Okay.
got hit hard. See, and the thing is you'll never remember your small losses. You'll never forget your big ones. I can name the three biggest losses I ever took. One was when Twitter accidentally released their earnings early before I got a chance to size down. Xilinx and what you're looking at, and on and Fastly. Those are the three biggest losses I've ever taken.
Yeah, and gosh darn.
Well, you didn't take a big loss on that.
No,
let's
talking really about an event that went against, that went against the position I had.
I know. I just wanted to clarify. It was a drawdown,
right?
Because you had a 30% gain, then it dropped 30% as soon as the report was released. So you were net even. You didn't.
Right.
So I think that's where I as we got into options, the first part of the show, what I wanted to do, stock nerds, was I wanted to talk about setups going into earnings. I wanted to talk about still not chasing, because this market, when you see something like Piton, this is a weekly chart, I'm aware of. When you see charts doing this, the want and need to chase is so prevalent, and it's greed, and we're not wired for, I mean, that's the most amazing move, Don, right?
It's really impressive.
Yeah, and
an easy hold too, because it just keeps. It's not the volatility is luckily all to the upside. It's held the 8 like a beauty.
And to try to make the point that you shouldn't chase, because chasing, you've been rewarded in this stock. But then you get a Xilinx or you get a Fastly. Like, I don't know who chased Fastly, but I reckon there's a bunch of people that chased it. Don didn't chase it. Luckily, Don was just following his rules the entire time, and he was able to get out. You got out at scratch, I think, right?
Yeah, a mild loss.
Yeah, like that's because Don didn't chase it on the way up. And Fastlys don't happen every day. I get it, but there are so many folks that have chased because they're trying to make up for lost time. And there's no market, like when people say this isn't the market to be chasing. In hindsight, you could say maybe this was the market you should be chasing, but when you're in it every day and you're looking at it, don't chase. Just wait. You got to constantly wait for your pitch. And during this entire period, I would say, and we did this show already, so I'm not going to rehash it too much, but during this entire notion of what have the markets been doing, like when we talk about the S&Ps and talk about look at this chart here, we're going lower. It's the presidential election. There's a whole bunch of reasons that there's no stimulus, the economy's in the pooper. We can say pooper, Don. I mean, Danny,
we can say
right?
that. Yeah.
Don approves of pooper. Danny, you okay with pooper?
Well, you've already said it, so.
Oh, okay. Well, I should have probably gotten that cleared beforehand. So, there's a bunch of reasons, but you don't hear us talking about any of that, because if you want to know what's happening, look at a chart. The chart is the absolute unvarnished truth of what the market thinks of your stock. And when you say things like, well, it's acting irrational, or the PE is too heavy or too high, what you've done effectively now is tainted the chart with your opinion. And that's where you get messed up. Like, look at this entry in Pinterest. Like, by the way, I've got stuff that I show you my losses, right? I show you when it's not working. It's just that this has just been a really good period. 9.15 is my entry in Pinterest. Look at this, and the stock did come down to the 21, so I bought it a little early. It was a little early, Danny, as they say. And does Pinterest report next week too? Oh no, the following week. So, but look at that entry, and then look at 9.15 on SPY. Let's find 9.15 on SPY. There's 9.15, but there's some stocks that just show you that hey, you can take a small risk, small position size, and you can step in there. And then when the market takes off, look at what the stocks do. And so a little early on the entry with Pinterest, but work out just fine. But risk control is what rules allow Don, Danny, Hunter to step into markets, and rules are what allow us to get out, if that makes sense.
Yeah, and you know,
Go ahead, Dan.
like you said, when you look at the overall market, if you're bullish and you're in a strong uptrend, you'll take bigger positions. You'll take the 5% positions.
Yeah.
If the market's kind of soft or weak or even in a downtrend, but you've got one or two stocks that look great on the charts, you may reduce your position size. You may take 3.
Yep.
So
and I think
it's not just a one size fits all. You got to take it in context of the overall market as well.
And can we all agree that the VIX is a horrible product? The VIX is Don, what's the best way to hedge if someone's concerned out there?
Inverse ETFs. The VIX is toxic.
Yeah, there's nothing good. I've been making fun of this VIX forever. Like when I call it the people's VIX, the VIX that no one knows, the cash VIX, that people say it's too high. Don, the VIX is too high at 2683. No, it's too low. It should be higher. This market's crappy. It's in the pooper. Like nobody knows.
And when I say it's toxic, the VXX, which is the best known ETF to trade the VIX, it's a combination of the next month, the current and the following month contract, and they're weighted depending on how many days are left. So depending on where those futures contracts are in the term structure, the VXX may or may not move with the VIX, which may or may not move along with what the market's doing.
And just to clarify what Don just said for people that don't follow it real close, it's very choppy. It's kind of herky jerky, and the correlations will be close and then not very good. You want a highly correlated, and it's not always the case.
It's not. And the VX, yeah, people know this current contract only has 5 days left on it. So let's go to November, which is still pricing out over December, but it's come down. Like the volatility is absolute. Like if you're trying to buy a VIX product because you want to hedge, you need this number to go higher. This number just a few weeks ago was 35. It's now 28. And so the volatility isn't going up. And so if you have a hedge on and you're using VIX products to do that, it's just an absolute, it's an effort and futility most days. And so you got to be so spot. I hate them. I hate the VIX products. I've seen so many. Is UVXY even traded yet anymore? I've seen so many people destroy themselves.
They took one of them off. I can't remember which one. They took one of them off.
That's double VIX.
Oh, it's not even there. I have it typed out wrong. There we go. My dyslexia. What a crap product that is. God almighty. That thing's a widow maker, man, or a divorce attorney maker. Make someone's divorce attorney year like that. That thing is awful. UVXY. That was on my notes. So I want to do this, Don. I've got. I want to talk about. I don't know what to call this segment, but Don's thoughts was the only thing that came in. It was either Don gets into a Twitter fight or Don's thoughts, and I thought Don's thoughts sounded a little more better than Don.
Just make sure that our newest segment, which we'll segue into after that, is hunting relative strength with Hunter.
Well, I want to do that now. Let's do that now. I think we'll save Don gets into a back alley fight for after Hunter. Because I don't want Hunter to come in and then it's like a letdown. You know, like Don gets into a back alley fight. Well, that's
tough to follow. Tough to follow.
Yeah. So Hunter, I'll tell you what, Hunter, tell me what you want to tell me.
All right, that's fair. All right, so just to give you a little bit of a preface here, I'm going to start with some individual names and then I'll make a comment or two in regards to industry groups. But under the radar, high relative strength stocks that have been showing some serious relative strength over the last week or two.
Hold on a
and
second.
Specifically,
what did you call this segment, Don?
Hunting relative strength with Hunter.
Okay, because I was thinking under the radar with Hunter, but hunting relative strengths with Hunter.
Yeah,
That's right.
He-
All right. So first
If-
one we want to
if
take
you
a
got,
look at.
we're open to something better.
I was gonna say,
No,
let the
I
stock
think
nerds
that
put
that's
in
a
their
good title.
suggestions.
What's that, Danny?
So we can have the stock nerds email me suggestions.
I
We
just
can
like
think
it when
about
speaking. Hold on a second, Hunter. Let's do that real quick because I like it when the stock nerds just call into the phone and scream.
Yeah, because you give them my number.
That's exactly right. So stock nerds, market lovers, listen, if you like what you hear on the show or you have questions and you want this strategy or you want to just follow more strategy to which we espouse, there's two things I want to show you here. Daily Market Insights, the tab you want to go to on our website. And the podcast is always posted early, but Don does, this is from last week, the 21 over 21. You can email Don, and I'll give you his email address here in a second. And then here is last week's video podcast, but there is a podcast down here. I don't think it's on this page anymore. Let me go next, where it's this right here. It's the October 2nd, where it's spotting market bottoms, really what it is, and combining it with the crash market indicator. And it just highlights how to use the smaller time frame charts to spot intraday reversals that could lead to bigger and better things. And it's probably the best explanation I've ever given of my process of how I do that. And so I think that's apropos. Don does some webinars here. That's where you sign up for him. And you know what, right here, let me, oh geez, let me just pick a video here that I did. If you go to this link right here, just click any video, you'll see the YouTube link. That's where all of Don's classes are, like Don's earning rules, Don's gap rules, Don's spotting bear markets before they occur, which was really apropos right before, as he did it in January. All of our classes are housed there that we've ever done. And so you can find them there as well as Daily Market Insight. But this tab, this Daily Market Insight tab is, it's not, we need a search function because we don't ever take down videos. So when people say, send me your back test or send me your record on how you would handle things. Okay, just look at any of our videos. Like you can see how we handled February, like when we started selling the second to last week of February, and we accelerated our selling the first few weeks of March. And then you had this catastrophic move lower and we were fat, dumb, and happy. Well, I'm thin, I mean, look at me, but happy. And so, affable, Don, affable. And so you can see how we would handle any situation. We don't edit these things. And clearly by this podcast, you can tell that we don't overly produce anything because that's not authentic. It's not authentic. Well, that's just it. It's not, like I view how we do the show, Danny, like brochures. Like Danny has had a stance against brochures that I'm 100% in agreement with. Screw brochures. No one's going to put their lack of sell discipline or how they crawl under their desk during a sell-off on a brochure. They're going to show you old people and living the good life and golfing and a whole bunch of other nonsense. Brochures are meant to reaffirm your confirmation bias. Brochures are not meant to help you raise good critical questions. We don't produce this show or have some grand meeting about we need to sound smart here, boys. No. You want real. You want wins and losses. You want how we handle risk when it's happening. And that's what you get with this. And that's what you get with us is transparency unparalleled in this industry.
Brochures are static. Revere is dynamic.
Ooh,
The market is dynamic. The market changes daily, weekly, and we change with it. The brochure will look the same.
Did you take a dip in the title pool? Because I'll tell you what.
Wait a minute. Are you saying you like that better than hunting relative strength with Hunter?
I liked hunting relative strength with Hunter, which we will get to it eventually, Hunter.
He took a dip in the pool of knowledge, man. The pool of knowledge.
Danny, you missed the joke there. Title pool, like title pool, title pool. I don't believe you got that for a second. You still think it's the 19th.
I'm a clairvoyant. I'm ahead.
Dan's going to call us tomorrow morning for the Monday call.
I'm 3 days ahead.
Well, that could come
Hey,
in
I'm-
useful with the investing, you know.
It
Yeah,
could,
yeah,
it could,
we're
yeah.
prepared.
Signing
We're
up
forward
for
looking. We're
draft.
forward looking. I'm reading the right side of the
Forward
chart
looking. Oh, speaking of forward looking, Danny, I got something.
before
For
it's
you.
there. Oh, not the
Danny,
cards,
what's your
not the
Don?
cards.
What's your thoughts on buying the dip?
Buying the dip is good as long as it's holding support.
Well, I'll tell you what, it's close, but in this envelope, hold on. In this envelope, I have officially bought the dip. I might be the dip.
Are those,
But-
is that Carson Wentz?
That is, oh, this is a 9.5. I cannot get the glare off of this. Hold on. Is that better? You can barely see it. Hold on. Let me see if I
It's
can turn up
Carson
the light.
Wentz.
Oh, I bought the dip on Carson Wentz. Hold on. I've got another light over here. Oh my gosh, look at him shine. It's Carson Wentz.
I was actually forced to pick him up on my fantasy team this week because I had Dak Prescott as my starting quarterback.
Bite your tongue, Don. That was the best pickup that was the best buy
Right.
you've made all year.
That's scraping the bottom of the barrel, actually, is what that is.
Not this rookie Carson Wentz, which I bought the dip on because he's at support.
You don't have any Jalen Hurts, do you, Tim?
You know what? I do actually. Not
Okay.
graded.
Because that's
I-
a solid
I-
backup. You never
That is a
know
solid
when Wentz
backup.
is going to go down. So
I love people
Who's on the
whose
Wentz
last names are verbs. That's one of my favorite things in sports. Jalen Hurts.
yeah,
Does he?
Wentz is almost it's
Wait,
kind
is
of
that
a play on
verb or a
words verb.
descriptor word, Don? I don't think that's a verb.
Jalen hurts my feelings. That would be a verb.
There you go. There you go.
My foot hurts,
So it sounds like it could be an
Yeah.
adverb.
said Dak Prescott.
Yes, he did say that.
Danny,
Wow.
Danny,
He
too
did say
soon.
that.
Whoa,
Wow.
Danny. Whoa.
I tied that up in a
too
nice bow
soon.
for, didn't I, Tim?
That's going to be in Monday's newspaper.
Wow, Danny. Wow. Too soon.
I'd rather play against Wentz than Hurts, I think.
I can't. You know what? I'm not even gonna try. This is the Fort Knox of packaging. There's another Wentz card in here, a graded Wentz card, but I can't get into the damn thing because I forgot to bring my scissors with me. But buy the dip on Wentz. I'll tell you what. I got some other cards coming. Still haven't figured out what to do. You know, we should get the Hunters. Hunter, you got sports cards in your blood? What you got?
I've got no sports cards, sadly. Maybe about 15 years ago, I used to go to Big Lots and buy the little packs at the beginning of the year, but not since then. But I know that they've gotten hot over the last year or so.
This is new art. No one's going to want any of no one's going to want all these other artists that like Monet. Give me some artists, Danny. They all just left my head. I literally just pulled out Monet.
You
and I
almost
was
said
about to-
Van
Menudo,
Gogh.
didn't you?
Renoir.
I was about to say
Picasso.
Bob Ross because Monet left my head. Who's the dude to cut off his ear? Bob Ross.
What's his name? Not
Van Gogh.
not Da Vinci.
Van
Van
Gogh.
Gogh.
Yeah, I couldn't even think of Van Gogh. So anyway, that no more. People are not going to spend money on that stuff. They're going to spend money on what they grew up with, their art, which is cards. And by the way, there are some awesome ABA cards. Like, you know, the ABA from, what's that movie? Is it Tropic Thunder? It's not Tropic. What's the movie with Will Ferrell where he's an ABA?
It is Tropic Thunder.
It's Tropic Thunder?
Yeah.
Then what's the movie with that guy who's really not that funny from Something About Mary where he's in the jungle with some questionable things happening? Who's the guy in Something About Mary? What's that
I don't
guy?
know that one.
Oh, Stiller, Ben Stiller.
Okay, Ben Stiller. And then didn't Ben Stiller make a movie where he was in
That's Tropic Thunder. You're right.
yeah, okay. So what's the movie with Hunter, can you research
Yeah, tell
No,
me what
the
to
movie.
type in.
Will Ferrell basketball movie? I think.
Are you talking about semi-pro?
It is semi-pro, yeah.
Did he play for the Tropics?
They were the Miami
yeah.
Tropics, and
Yes.
then they moved to Flint, Michigan, and didn't change their name, and then they were the Flint Tropics, which is just awesome.
Yeah.
Which
So
is
anyway.
kind of how we got the Utah Jazz.
Or there's
The LA
another one
Lakers.
like that.
The LA Lakers,
Lakers.
yeah.
Yes, the LA Lakers. There's a couple of them out there like that. We are so far removed from anything that we were.
That is a great movie too, Tropic Thunder,
Oh,
with
Yeah.
ABA cards.
Robert Downey Jr.
Is it a good movie?
Yeah, it is. Yeah, damn
Is it?
funny. Oh yeah.
Is that it? Was that his comeback role, or was Iron Man his comeback role?
Iron
Uh,
Man.
This was around the same time as the first Iron Man, I would say, somewhere in there.
Anyway,
Yeah, but Iron Man was his
sports
redemption.
cards. Like you can find some really awesome. You know what? I wonder if by the time this airs, our good friend Mark from Buffalo, he gave me the idea, but he doesn't know he gave me the idea. So he put up a Julius Erving card for auction, right? And I'm like, you know what? I should start buying older basketball cards, like people that I know, and I know Julius Erving. I was a Sixers fan, and so I started doing all this research into Julius Erving's rookie cards and stuff from the Virginia Squires, Don.
Did he get traded to the New York Nets then from the
Yeah.
Virginia Squires?
Yeah, you should see these cards. Like they're graded and everything. So I bid on our good friend Mark's card. He doesn't know it. He'll know it now. I think the auction's over by the time. Well, I don't know. Either way, Mark gave me the idea, so I'm like, I'm gonna bid on Mark's card, and then I started putting out bids. I won 4 of these things, not the ABA, but I'm gonna put out some bids on ABA cards. ABA cards are the freaking best, on early 70s.
Yeah, with the red, white, and blue basketball. That's pretty
Well,
cool.
yeah, and it's all about supply and demand. There's not that many graded out there. It's just like a stock, when eventually they're all gonna be bought up anyway.
Now, I remember George Gervin with his afro, his big afro,
Yeah,
and
like
coming out
you can find
big,
some
the
graded Gervins.
bell bottom warm ups.
Yep.
Absolutely,
From the
man.
San Antonio Spurs.
The Iceman, George Gervin.
You know what? Sometimes to fall asleep, I'll put on old football games or basketball games on the YouTube, and they'll just play next to me, and I'll hear the. I put on a couple yawners, San Antonio Spurs from the ABA days. You can find them on YouTube.
Oh,
Those things
please.
will put you right to sleep.
Please. Gervin
All right.
scoring 45 points. Were
Yeah,
you
Danny,
dreaming about sports cards, Tim, when you go to sleep?
Sometimes, yeah, absolutely. When
I dream
Well,
about
what's standard-
spreadsheets, so why not?
Sports cards and spreadsheets. I have to start a new.
that sounds like a show unto itself. Oh, and there's a site I found that actually graphs the price of sports cards. Like you can actually chart them, which
I bet they're using Excel.
yeah, probably are. Hunter. Oh, Danny's from San Antonio. That's the thought I was trying to get out. Hunter, what are you looking at this week? Relative
Okay, so-
strength, sectors, subgroups. Give it to me.
Yeah. So first thing we're going to look at here is this is.
Hunter.
Yeah.
Sorry,
Go
you're
ahead.
gonna get into this. Did I didn't even get to the contact us page, did I? That's not on purpose. I literally got derailed by sports cards, and then I forgot to tell people how to get a hold of us. And I would leave the show because I want some of Don's 21 over 21 list next after this. I don't even know if we're going to get to slander Rick Barry today, Don. We might save.
We can do that next week.
I think so, because I like the life. Here's the thing about Rick Barry. I don't like him. And I don't like I like the discussion Don had. I don't like his professional side. He might be a very nice human being. And I don't like that he doesn't advocate for individual investors. I think that Rick Ferry is the kind of guy that when faced with polio would build you better leg braces. He wouldn't try to find the cure. And that mentality, it rubs me the wrong way because that's a defeatist mentality. And I don't think like that. And so.
You don't like to buy an whole pie chart.
Go ahead, Don.
Yeah, there are actually a lot of things that we agree with Rick Ferry on, believe it or not, but the biggest thing that we disagree with him on is the deal breaker. And that is, let's first of all, what we agree with him on is that there's no reason for any investor to buy a closet index large cap mutual fund with huge fees because they're not going to beat the S&P 500. Okay,
Agreed.
we all agree with
Okay,
that.
I agree with that. Yeah, I agree with that.
He has seen, and we've seen, we're both in the same business from as far as helping people to improve their financial lives. He's seen a lot of the horror stories that we've seen with some of the portfolios that people come in to us with. And the way that he's decided to solve it is by going low fees, admit that you can't beat the market, and just ride it out. So that'll improve a lot. If people just do that, they're improving their lot from owning closet index mutual funds with high fees.
Sure.
But there's no downside protection in that approach. And that's obviously where the road forks between his approach and our approach. And also his just disdain for people trying to do better than the index, because from his experience, people try and they can't do it, and they end up losing more money than they would make if they're one of the few. And granted, it's not easy to beat the S&P 500 unless you know what you're doing. And if you're just an average investor, and by average I mean I should say below average investor, and you're not going to put a lot of time and work into it, you probably are better off in low cost mutual funds with a stop below the 200-day moving average. That's the simplest way to do it.
Sure.
But you can, if you're willing to put in the work. There is a book out there that all four of us on here know and love very deeply, and it lays the path for how to do that. And there's no reason people shouldn't be trying to improve themselves.
I think,
So
hold on, Danny,
I'd like to
Danny,
jump
1 second. I know, I clean mine up too, because you're going to clean it all up. Like I want you to come in and just sweep it all up into one nice Dannyism. I think, well, I mean, you can Mazongo.
Go ahead.
Mazingo it. Oh God, I just butchered it myself. What I don't like, Don, is that I don't know if Rick is talented enough as a human being to do what we do, and that's I don't think
he admitted that he's not. He said he
Okay.
tried it and he failed in it, and that was part of our discussion. I was like, just because you failed, it means you didn't follow the cell rules that everybody that is committed to it does follow.
But his arrogance around, well, if I can't do it, surely no one else can. Look, there's a lot of things I can't do that have nothing to do with physical ability. Like I'm not like Don is a spreadsheet ninja. My brain, unfortunately for me, isn't wired that way. I wish it was. I'm not a spreadsheet ninja. Well, Tim, you could learn. I just wouldn't be as good as Don. It's a natural talent of Don's. It's the way his brain is wired. But that doesn't mean I put down people who are into spreadsheets. Like you don't hear me going around spreadsheets. They ain't gonna get you anything good. Like, but there's a lot of people that do that because, I mean, how high on his own horse is he that because he can't do it, surely everyone else can't do it. So you're better off not even trying. And that's what I take issue with. I am a champion, and so is everyone else here, of the individual investor, of the spirit and the will to try and to use, and we give you the tools to use risk control, and we're transparent in our approach, and we show you the things that we're doing so you can do them too. And then you're like, well, you know what? What Don said earlier, like, I don't want to put it, if you don't want to put in the work, great, call us. We want to do the work for you. And if you want to do the work, but your parents don't, your loved ones don't, send them our way, please. It's real super simple. 855-732-5932 is how you do that. Our fees are so incredibly low, period. And then when you measure it against the opportunity cost, they're even lower. Opportunity cost against what? What you're missing, and then what you're exposed yourself to. So I think Danny, you can come in and clean this up in a second. I think what we do is we discuss this, Don, in more depth next week, because I've got more depth. But I think then what we do is I have an ETF strategy that I created a number of years ago that can, if people don't like individual stocks, we can delve into it, and it includes a whole bunch of rules. And I've had like 5 requests in the last 3 weeks to talk about that for some reason. And I don't know if we mentioned it somewhere or either way. I think we can do that, and it will give more credence to why buy and hold. One is so dangerous, but how you can combat it and not increase any of your risk by utilizing individual stocks. Does that sound like something people want to do? I don't know.
I don't think if they didn't, they wouldn't be listening to this podcast.
All right, Danny, come on, clean it all up.
Well, so first of all, Rick Ferry, it's good that he's trying to get you away from high cost fee structure, commission, broker, mutual funds to low cost funds, but then he charges you a nice hefty flat fee in order to put you there. So those low cost funds aren't quite as low cost when you add his fee in, but he does put you at, but it goes back to Don's old adage that cheap Vanguard funds is just a very cheap way to lose money fast in a bear market. So you still don't have.
Let me clarify what Rick does. He had a $1.5 billion RIA that he sold, and now he does not run money anymore. He charges $450 an hour for people to consult with him, and what he tries to do is talk them out of their current advisors, and he puts them in 4 index ETFs and tells them to never sell, dollar cost average in, don't hire another advisor. Yes, you just paid $450 an hour.
What do you need his fee for then? A monkey could do that. Anybody could do that. You're just going to buy.
You're overestimating how much attention people pay to their finances. People will research a refrigerator for a month, and they open their statement, look at it, and throw it in the trash.
I agree.
Because it's scary. It's scary to them. It's scary to them.
Don, I'm agreeing with everything you're saying. I'm saying, but if you're just going to use 4 different index funds in varying proportions, depending on your age and what you're going to do, hell, I'll do that for you for free. That takes 10, because I already have the background and the knowledge. All I'm saying is I don't see what the attraction is for the fee, and you still got to worry about a 30-40% drawdown.
Sure, and it's like anything. Not everybody in the country knows about Rick Ferry, but if they're underperforming in their 401k or their retirement accounts and somehow they come across him and he solves the problem for them, that's why he's successful at doing what he's doing, just like we are when people come across us and realize, wait a minute, you can actually get out of the market and not take a 34% beat down in 4 weeks like happened in the first quarter. It's all a matter of getting the word out.
Right.
Okay. So let me pause you guys right there. So here is where we stand with the podcast. The cameras are frozen. We're still recording, I believe.
Nothing's frozen on my end.
Nothing's frozen on my end either. No.
Oh,
just
yeah,
you,
I'm all
Jim.
good.
Just you. We're all good.
just me. Well, that's fine. So we're going to keep going. I can still type tickers in, and I think what we'll do is we'll table the discussion. Danny, did you clean up everything you wanted to say? I'm sorry.
Yeah, well, that's all right. We'll talk about it more next week because it is a very good discussion. But I do want to go to Hunter about what he's doing.
That's what I was about to do. I was about to pitch it to Hunter for
this time we mean it, Hunter.
This time we're not going to take it back from you, Hunter. We're going to give it to you and let you run with it.
Go ahead.
Okay. All right. So I'm good to go now. 100%.
Yes, you're good to go.
All right.
If Tim starts talking, just talk over him. Keep going.
Okay. Gotcha. All right. So first thing we're going to look at here is 4 names specifically that made new highs in regards to relative strength Monday through Thursday, meaning all 4 days. And then 3 of these names are also making new highs on relative strength today. So the first name and first ticker symbol is CPRT, Tim. That's Copart.
Copart, man. They got an office here in Dallas.
Yeah, and granted, when you look at these names and you look at the charts over the last few weeks, that they've had incredible moves. And so really the objective here is to identify these specific stocks as they're approaching and continuing to make new highs in relative strength and being ahead of these big moves where you can see they kind of went from about 100 up to 120 over the last 2 or 3 weeks here. So Copart, they conduct salvage vehicle auctions for insurance companies, banks, dealerships, etc. Which you think, well, that doesn't sound like a very interesting business. But if you look at their performance and their fundamentals over the last few years, they're a very continued success story. I mean, they really have continued upwards. But But what's interesting is amidst the sell-off that you saw towards the beginning / middle of September, they really didn't take much of a hit, and then they've just continued up over the last few weeks as well. So that's the first one. Second is DAR, Darling Ingredients, which is another one that's really taken off over the last few weeks here. And what they
Let's
do,
be clear about something. I have given Hunter minimum liquidity requirements for these. So these are not thin BS stocks. He's not even bringing anything to my attention that we wouldn't. It has to trade at least $30 million in daily
correct,
dollar volume. So it's got to be big enough for us to buy.
correct.
Okay.
And so, and
Because
these are,
I'd never heard of 3 of these names that he's brought to my
I never heard
attention.
of Darling Ingredients, but this is great. Copart I knew, Darling I have not known.
yeah, so and it's a really interesting, unique kind of business model that kind of plays on the ESG type of approach. They provide rendering / cooking oil and bakery, waste recycling and recovery solutions. And for whatever reason, and I guess people are also at home, people might be cooking more, so it might be utilized, who knows. But
Educate our listeners on what ESG is.
So environmentally, socially responsible, basically things where, we're recycling, or Tesla, for example, they want to, reduce the fossil fuel consumption to where we're on renewable energy. That's essentially the approach, is we're being environmentally responsible or we're being socially responsible. And so in this name particularly, we're being more responsible with our cooking oil and bakery waste, more or less, right? So it's an interesting approach, very unique, but they have been very strong, and a very, very strong move over the last 2 weeks, 3 weeks right there. The next name is Paylocity, ticker symbol PCTY. And this is a payroll and HR software company that they particularly work with medium-sized businesses. So you may have heard of Paycom before. They're somewhat similar. Paylocity is smaller in regards to market cap. They're a little over 10 billion. Paycom's about 22, 23. But man, what a move. They have taken off, and Paycom is right there with them, and continued to be strong, even on down days. They're one that's made the RS new high list every single day this week, and they were on it a good bit last week as well, as I'm sure you can tell by looking at the chart. But I have some personal experience with the software platform. One of my good friends got married to a girl who works for Paylocity out of Birmingham. And honestly, it is a good company. Just from my own personal experience, the software is very easy to use. The platform is very easy to use. So it makes sense that they're doing well. But the key thing is they are one of those cloud-based companies. They're using the cloud in an approach to make things easier, more automated for businesses. And you've seen that theme kind of continue to be strong across various industries. Next ticker symbol is WMS, one that probably nobody has heard of. Advanced Drainage Systems. Okay, and once again, very strong. And I'm gonna read you what they do. And granted, it's a little bit complex, but they manufacture thermoplastic corrugated pipes for the construction and infrastructure industries. And you might say, well, what the hell is that? But you look at how they performed and how strong they've been, even when the market was not doing so well, and they continue to be on this list as well. They were another one that's been on it every single day this week. They're making new highs every day. They were on it last week a number of times as well. But those are the 4 primary under the radar RS stocks that we saw some unique relative strength and recurring relative strength in some not so well known names.
Awesome.
Now,
Second,
all these stocks are extended, but Hunter is digging through this on a daily basis now, and these stocks also made a relative strength new high right when they broke out of their base. So that's really what Hunter's trying to identify, is when it first pops out and has the relative strength, not
when they're
not
super
necessarily when
like
it's
this.
already extended, right?
Now,
So
well, I was going to say also, are you going in it? So once you find these stocks in their subgroup, in their little subgroup, or you're going to be looking at the other names in that subgroup to see if they haven't made the move yet. They're poised to make the move.
That's exactly
Follow
right.
the leader.
And so we're looking at industry group data in a little bit more in-depth way as well to do exactly what you're saying, to identify those breakouts and when the RS is climbing, and what are the leading stocks in that group. For example, with Paylocity, what are their peers doing? So you're spot on. That's what we're looking for, is we want to identify the leaders in those various sectors or industries, and hopefully identify an attractive entry point and opportunity. So I've got two more for you.
Okay. Sorry.
No, you're good. That we're not on the RS line new high list every day, but they've been on it 3 or 4 days this week. The first one is ticker symbol POOL, Pool, and very simple business model, right? They operate pool equipment and supply centers in North and South America and Europe. But over the last few weeks, they've been incredibly strong, continuing to move higher, and it kind of coincides a little bit with the home builders also being strong, right? You've got COVID making people stay at home. It's kind of one of those stay at home projects / vacations. So for whatever reason, people have been adding pools to their homes, that kind of thing. So it's just a unique one that not many people, pay attention to. It's not one that we have currently in any of our portfolios, but they've really been strong over the last few weeks. Last one is BILL. This is a cloud-based software company that simplifies and automates back office financial operations for mortgage-backed securities, which you might think, well, geez, what is that, right? But it's again the theme of cloud-based companies improving, one segment of a business, whether it's payroll and HR in Paylocity's case, or back office financial operations for a mortgage-backed securities company, or various banks and things of that nature. Those names have been hot, and they've been doing really well over the last few weeks and showing a lot of relative strength.
Awesome.
So that's my last ticker symbol for you, at least in regards to high relative strength, continuing to make highs, that kind of thing. I do have a few comments briefly on industry group data and where the outperformance has been there and what stuck out. And granted, we've started intaking this data and really analyzing it really only over the last week and a half or so. So this will get a lot better as we get more data and can kind of see a little bit farther back. Right now we're working with relatively fresh data. But the big thing that sticks out to me just from my analysis is energy and solar continues to be hot and a leader. There's a new IPO in the energy solar sector called Array, which IPO'd yesterday, had a big day, and last time I checked, they were continuing to have a strong day today.
Ticker ARRY.
Correct. Sorry, Tim.
That's all right.
But interestingly enough, what they do is they design and manufacture ground mounting systems for solar energy products. So it's a bit of a unique play on the solar industry, just from a equipment supplier type of scenario. But they continue to be strong. There was a small pullback in some of those names that had run up a ton, like Sunrun. But for the better part of the last week and a half or two, they've outperformed the broad markets pretty significantly.
What is Sunrun's ticker?
RUN.
RUN.
Oh, this is it. Oh, I'm on a 30-minute chart. I'm like, why does it look so bad? There we go. Thank you.
Yeah. And then there's JKS is another one, Jinko Solar, I believe.
Jinko Solar. That's the Japanese one, right?
I believe so.
The Chinese one.
Chinese, yeah.
There you go. Yeah. That's a
Jesus.
hell of a move there. But for whatever reason, they're still hot. They pulled back a tad. Some of them broke below some certain levels, but they continue to outperform.
Puts this to shame. Jesus.
Man.
Yeah. So that's something we're keeping an eye on, and theoretically, what we're trying to do here with analyzing these industry groups and this sector data is we want to be able to see those big changes in sentiment and big changes in relative strength as they're happening, right? So we want to be able to identify those changes in the sector's industries, and then also identify the leading stocks that we want to keep an eye on, and hopefully identify good entry points and good opportunities within that. Just a couple of other minor notes in regards to the industry groups. We've seen small and mid caps show some strength somewhat over the last week and a half, and a lot of that is reflected in oil and gas, and banks and financials doing a little bit better over the last few weeks, and that's reflected in their industry group rankings as well.
Awesome.
And then lastly, I've touched on this already, just the cloud names continue to show strength in regards to, whether it's in the banking financial world and, medical life sciences, and like with Viva, for example, or with Paylocity, those names continue to be strong. So that's kind of the three main things that stuck out to me just from going through the data. And like I said, we'll get more in depth with that and hopefully be able to really identify some unique opportunities. Last thing that I was going to touch on, and I think Don will go into this a little bit as well, on the other side of the spectrum, DraftKings has been weakening in regards to RS. I know we got out of this last week, I believe, but they broke some levels and it looks like they've come back a tad, but they're fighting to try and hold that 50. But as of this morning, they were not. They'd gotten down, I think, a little below 44. So just one that I'm watching that can't really seem to find that support. Maybe it will today. I actually believe Don mentioned this on the video yesterday as well. So that's pretty much all I've got. I know I went through a handful of things here, but this is what we'll be looking for. We'll be looking for, what's strong and, what's outperforming the market on up days and what's, looking good on down days as well. And then trying to identify those changes in relative strength as they happen in real time, so that we can take advantage of those moves.
Let's do this. So I can't see you fellas anymore, but you guys can see me, right?
Yeah,
Yeah,
you're
we
looking
can.
good, Tim.
I'm hoping we're still recording. I think we are, because that was a really good segment by Hunter. Let's do this. I've got the spinning wheel of death over my GoToMeeting, so hopefully I can figure that out by the time we're done here. Let's do this, Danny. I'm going to have you take us through the normal close, and then Don, can you do maybe 2 or 3 stocks on the 20 that are potentially setting up on the 21 over 21 list, and then we'll I got one last thing stock wise, and then we'll end the show. So Danny, you're up.
All right, folks. Listen, if you like what you heard, please tell a friend, tell a neighbor, send them to revereasset.com. They can go to the subscribe button, sign up for our daily market insight. Tim and Don rotate doing that. And it's about a 10-minute short video, what we're looking at, what we're researching, even stock ideas, sector ideas. You can also go to webinars, which is Don's Lunch and Learn. He does a lunch and learn about once a month or month and a half, time permitting, on Wednesdays at noon Eastern time. And even if you can't participate, he'll send you the recorded after it's over. You can also email any of us at dan@revereasset.com, Tim at Revere Asset, Don at Revere Asset, or now Hunter at Revere Asset. Or you can also call us old school at 855 Real Wealth.
And so, stock nerds, also, I'm a huge proponent of utilizing Twitter. I convey a lot of things on Twitter to stock nerds that follow me. I know Danny and Don do as well. And so at TJ Razors, how you follow me. If you follow any of us, just let us know, because we'll follow you back. And then that's your direct line to us. Like if you want to be text messaging buddies, absolutely. Like here's one Danny Stewart, that's Danny's Twitter follower. But if you follow, you just got to let us know, hey, Tim, or hey, Danny, hey, Don, I followed you fellas. And then you can message with us. And I'm telling you, Twitter's brevity, and it's so, you'll get things like this, Don's favorite album. Don is D Van, I don't know why that's not showing up. Oh, D Vandenborg, with a little @ sign in front of it, is Don's Twitter handle. And it's so easy to communicate with us that way. If you don't want to send an email, I'm telling you, emails, we get a ton of them. Thank you for doing that. But sometimes it takes a little, it's me, I'm the problem. It takes me a while to get back because I get detailed answers. And Twitter, I find, is so much
Every
easier.
song on that album by Cinderella is fantastic. That's 80s metal at its finest.
Nobody's Fool is the most famous one on there, isn't it? Or am I mistaken?
Yeah.
Is that the one that was on the Nobody's Fool?
That's the
Nobody?
one. That's the one.
Yeah. What year is this? 88?
That sounds about right.
Okay, 2 stocks, Don, 2 stocks.
Oh,
Two
sorry,
stocks.
sorry.
Keep
God damn.
Keep it going. We're
Jesus.
taking a left turn again. Turn a left turn.
Sorry. Give me 2 stocks.
Complete opposite ends of the 21/21 list. HZNP Horizon, nice low volume pullback into the 21, and it's holding the 21. On the other end of the spectrum is something that's extended but is really acting like it wants to be something special, and that's NET, NET. I do not own Horizon. I started a 2% position in NET over the last 2 days.
What's your favorite setup right now, Don?
High tight flags, stocks that is something similar to NET, where it made a big move up and it's consolidating, and look for low risk entries coming out of the flag.
Yeah. Oh, let me show you this. This was on Thursday, not Thursday. There's a 30-minute chart of Chipotle right here. Don's talking about high tight flags and how they resolve. So here's, I guess this was Thursday. This high tight flag, Don, was, I just haven't seen one like that midday in a long time.
That was a hell of a shakeout there
Yeah.
before it.
Yeah. And like I didn't know you were gonna say high tight flags, Don. Danny, I'm sorry. Let me find it real quick. It's right here. Oh, I have it up. So there it is. That's the 1 hour chart, and then there's the 15-minute where it came from. But when you spot these patterns, man, are they something fun? There was a consolidation here on the 1 hour, and then I honestly don't know what caused that spike. It doesn't matter, it happened. But high tight flags are fun. It sounds like a t-shirt we should make. High tight flags are fun.
High tight flags are fun.
Yeah, but that goes down. Were those the 2 stocks you wanted to talk about?
Yeah,
Or do you have a stock?
I also like the Lulu setup, not on the 21/21 list, but it's coming up the right side of its base.
Let's talk about that. Oh, I do like that. Thank you for putting that on my radar. A little gap fill action. Now it's got to get a little overhang going away there. CMG is, I know earnings are next week, but it's my favorite setup, and I also like RH, so we'll look at that too. But this isn't really a bowl shape, isn't too much of a pattern that people follow, but I'm thinking that CMG, if the market continues, wants to come up here and visit this old high, and we'll see if that happens. There's a 2-day chart that you're looking at right here. Man, do I like that consolidation though, a whole bunch. I don't know if it gets there before earnings. And I like RH. I think RH has the chance to be something really special. If it can take out 410. If it takes out 410, I think you're going to go see 430. I think it has the potential to be a zoomed on, because RH is, I don't know why people short it, but they do. What's CM doing? Jeez.
Looks good.
Oh my
Time
gosh.
high.
That's nutso, man. That's awesome. Awesome for ZM shareholders. So I tell you what, I think, Hunter, that was an awesome segment. I can't see you anymore, but that was an awesome segment you did, man. I think that's going to resonate really well. Yeah, I think that was fantastic. That's I think people are going to really like learning from you going forward. So congrats to you. I would have told you if it was bad, but that was awesome. Like, I genuinely think that was a great segment on your part. So
I appreciate it, man.
awesome
Thank
job
you.
there. Yeah, awesome. All right, Stockners, market lovers. We love you, Danny. Take us home.
We'll talk to you next week on Your Money.